In today's video, I'm going to explain why I believe most analysts are underestimating Tesla's potential and consider whether the stock could reach $10,000 per share by the end of the decade. So let's take a step back and think about the high-level drivers for the increasing value of Tesla shares over the coming decade. And as far as I see it, there are really four. The first is the car business, which could be producing at least 10 million cars by 2030. Second is the semi business, which is ready to totally disrupt the freight industry. Third is the energy business, with grid-scale and domestic-scale battery storage, and of course solar. And fourth is autonomy, which obviously we talked about in the last video, but I'm going to explain how we might actually be closer to full autonomy than most people realize. And of course, in addition to these four, there's all the innovations that Tesla will come up with during the next decade. If you think back to the beginning of the previous decade, many of the things that are happening today wouldn't even have been foreseeable back then, and I'm sure Tesla will continue to innovate and surprise us with all kinds of market-disrupting technologies. We start by looking at delivery numbers. As you can see, during 2019, Tesla delivered 367,000 vehicles, and Tesla has guided that they will produce at least 500,000 vehicles during 2020, and their businesses generally will grow at a minimum of 50% per year. And that's likely to continue for the foreseeable future. Now let's look at the current catalysts for short-term growth. Now there are many channels covering this, so I won't go into huge detail here. But they are Giga Shanghai, which is ramping faster than anyone expected. It's already expanding for Model Y and on-site battery production. Model Y deliveries started a few weeks ago, and it's likely to be even more popular than the Model 3, and with a higher average selling price and a similar cost of production, is likely to produce more profit. Giga 4 in Berlin, site clearance has begun and production is expected by mid-2021, and maybe a Giga Texas. Now, the reason that Tesla is out looking for a site for a new Gigafactory is that they need to produce Cybertrucks in large numbers. After the unveiling, the media focused on the window failure, and the stock dropped 6% the next day. I was focused on the incredible range, pricing, which was far lower than anyone had predicted, and the utility of the stainless steel construction. The last official reservations tally released by Elon was for 250,000 Cybertrucks, but a crowdsourced spreadsheet allows reservation holders to enter details of their own orders, and they have plotted this graph which shows that there are now over 500,000 reservations. I added my own reservation to this spreadsheet and it fitted in exactly as predicted, so I am convinced that these numbers are credible. One reason I placed an order was to lock in the price of full self-driving at $7,000, as I believe this could be very valuable by the end of next year. More on that soon. Now, one thing many commentators are missing is how Tesla will accelerate the production of cars at its factories. Now, we know that Elon likes to find ways to do things 10 times better. For example, the Boring Company, which has reduced the cost of tunneling by a factor of 10. Reusable rockets has reduced the cost by more than a factor of 10. Now, from the patent application, from the single stamping machine and the new wiring method, Tesla is working to speed up the production line in ways that haven't even occurred to legacy automakers. Yes, they will need more factories, but they will also massively increase the output of all of them. If you stick to 500,000 capacity per factory, they'll need 6 to 8 car plants by 2025, but there are clues that they will be scaling to 750,000 or 1 million vehicles per factory. And if they can do that, the profit margins will widen and they can reduce prices to open up new waves of additional demand without destroying profitability. Before we move on, the last thing to say in regard to the car business is to dispel the myth of the Tesla killers. Now, the only company that's really even trying to catch up with Tesla is VW. They're having software problems with their VW ID.3. The Audi e-tron and the Porsche Taycan are both quite poor entries with very low efficiency and woefully inadequate technology. And for any of those manufacturers to catch Tesla, they would at least need to be going faster than them. And from my perspective, Tesla is at least 5 years ahead, and is moving faster and accelerating. So I think the chance of any of these auto manufacturers catching Tesla is basically non-existent. Even if they could catch up and produce a competitive product, the EV market will be growing so quickly during this decade that there's enough demand for all comers. Now we move on to the other areas that are not being accounted for by analysts. And we start with the Tesla Semi. Let's just recap what was revealed at the launch event. Firstly, Tesla Semis will be quicker at going from A to B due to better acceleration and hill climbing. Second, they're easier to drive as there'll be no gears and they'll have advanced autopilot as standard. Third, they'll be more reliable with motor redundancy. They can run with just 2 of the 4 motors still working and a stronger windshield using the Tesla armor glass. 4, they will have lower fuel costs by at least 20% with guaranteed pricing for electricity across the country, or at least across the US. And as a bonus, if they operate in convoys, they could be 50% cheaper than current trucking, and that takes them to being less expensive than rail. This means that all companies that use Tesla Semis will have a cost advantage over those that don't, and it will become essential to use them in order to compete. So if you're a delivery company like UPS and you're using Tesla Semis and another delivery company isn't, their cost base will be higher because their trucks will be moving slower, more difficult to drive, less reliable, higher fuel costs, and it will be very difficult to compete on price with people who are using the Tesla Semi. Now also, competition in this space is almost non-existent. So Volvo have been working on a truck, but it only has 150 miles of range and no pricing or confirmed date for when it will be available. Nikola has also been working on a truck, but that one is essentially a hydrogen fuel cell hybrid type vehicle, and I have severe doubts whether hydrogen fuel cells will ever make it off the ground. Now, Tesla have confirmed limited production in 2020, and we've seen sightings of them testing their trucks, most recently in Canada, doing some cold weather testing. So when Tesla do release the Semi, and when they have the capacity to build them in large numbers, which is obviously dependent on their shortly to be announced plans to scale battery production into the terawatts, I think it's clear that they will be able to sell as many as they can produce for many years to come. Now let's look at the energy business, starting with grid-scale batteries.
All right, well, thanks for coming out. It's a bit of a drive. When this is done, which will be in just a few months, it'll be the largest battery installation by a factor of 3 in the world. I think what this serves as is a great example to the rest of the world of what can be done. You see here, this whole event, everything, is powered by those packs. This is actually what the future will look like, and the faster we get there, the better.
That was the first large-scale grid installation done by Tesla at Hornsdale in southern Australia. At the time, much ridiculed, but proved to be enormously successful and has recently been upgraded with an extra 50% capacity. Similar projects are popping up all over the place, from Nantucket, where they're being used as backup power for the island, large new installations in Southern California and Alaska, and a proposed enormous installation in Hawaii. Currently, these are replacing expensive and inefficient peaker plants that only generate a small percentage of the time to cover times of peak demand, but with generation increasingly from wind and solar, grid-scale batteries help to smooth out the mismatch between when the sun is shining or the wind blowing and when electricity usage is highest. In addition to grid-scale, Tesla has its Powerwall and microgrid solutions. A recent report shows that the virtual power plant is already being very successful in stabilizing the local grid. Tesla launched version 3 of its solar roof late last year, with the initial aim of installing 1,000 new roofs a week. With pricing being competitive with a higher-end new roof, it will make sense for a lot of people. In the US alone, there are 5 million new roofs every year, and globally this is an enormous market. When combined with Powerwall, it is a compelling and unique offering, and looks set for massive adoption. As always, Tesla will keep iterating, improving the product and driving down the cost. One more thing that almost no one is expecting is that as the costs of solar energy and battery storage continue to decline, we will reach a point where the per kilowatt cost will be below the transmission component of electricity purchased from the grid, which is the fixed daily amount that appears on your bill. At that point, which we will probably reach in the second half of this decade, grid connections become uncompetitive and everyone, including residential and most commercial, will be better off with our own solar and storage. This will be both an enormous opportunity for Tesla and an enormous disruption of the electricity generation industry. The fourth thing that will drive massive appreciation in the stock price is autonomy. I covered this extensively in the last video, but here I want to talk about why I think it will arrive sooner than most expect. When you think about how autopilot and full self-driving have improved over the years, many people think of it as a linear improvement. Thinking about how far it has come and how far it has got to go, they fall into the trap of believing it will be another 5 or 10 years before Tesla is capable of full autonomy in all situations, known as level 5. However, the technology that autonomy is based on is improving exponentially, not linearly. The hardware power is increasing exponentially, the data being gathered by the cars is increasing exponentially, and the progress in the area of machine learning is increasing exponentially. This will lead us into a period where we will be amazed by the progress being made. We have already seen the ability to recognize traffic lights and stop signs in early access. We've also learned from the Third Row podcast that the rewrite Tesla has just completed is improving some of their processes around labeling by 2 to 3 orders of magnitude. Put this all together, and I firmly believe that we will see Tesla close in on full level 5 over the next 2 years. ARK Invest say that if we knew who would win the full autonomy race, they would be worth about $1.4 trillion today, rising to $9 trillion by 2029. So returning to our question, can Tesla stock reach $10,000 a share by 2030? I think it can. And the reason it can is because of the car business, which everyone is following and valuing at the moment, but also because of the huge potential of the energy business, which is being completely missed in valuations at the moment, the semi-truck, which has a huge potential market, its lead in autonomy, which, as I've explained, comes from a combination of the hardware it's deployed with the sensors and the compute power, and its massive lead in collection of data. And finally, climate change tailwinds. During the next decade, we're going to see more and more acceptance of the issues of climate change. More and more governments are going to be banning fossil fuel cars and encouraging the movement across to solar and renewable electricity generation. So I think these are all huge pluses for Tesla, and as long as they continue to execute the way they have been, I see no reason why they couldn't achieve this. If you enjoyed the video, please do press the like button and subscribe to the channel. It really helps us get found by others. I know I don't have all the answers, and I want to learn from everyone who watches these videos so I can share that knowledge with you all. If you think I missed anything important or got something wrong, or you have a suggestion for future content, please let me know in the comments. I really want your feedback, and I will read all your comments. Please also consider supporting the channel on Patreon. You can do that at patreon.com/profitfromdisruption. Thanks again for watching, and I'll see you on the next video.